In Investing 101 today, financial strategies to use during the pandemic, Ric Edelman, author and financial expert, is also on a nationally syndicated radio show, is with us now. And Ric, with all that's going on right now, what should concern people the most?
Well, as you've talked often, Angie, it's a mess in the economy right now, and we all know the reasons why. But for some strange reason, the stock market seems to be doing fine. It's as if investors think there is no pandemic, that there is no massive unemployment, that corporate profits are not worse than they've been in 12 years, that bankruptcies haven't been higher than in 12 years. There's this massive disconnect. And as a result, we're fearful that investors are not bracing themselves for the very real possibility that there will be a major market correction in the short term. And if you have a long-term time horizon, fine, no big deal. You can wait it out. But if it hits you and you're not expecting it, you may panic. And people tend to do bad things when they're panicking.
What are some steps that people can take to protect their finances?
Well, there are really three simple things. Number one, do you have enough cash reserves? We've seen 42 million Americans lose their jobs. Millions more will before this is over. And this is going to last a long time. It could take a year or two for you to find a new job if you lose your current job. So do you have enough cash to pay your bills for the next 12 to 24 months? That's number one. Make sure you've got plenty of cash. Number two, do you have a long-term time horizon? Are you planning to leave the money you have invested alone, untouched, for the next 10 years? If so, great, hang in there. But if you think you're going to need to withdraw that money sooner to pay for college, to pay for a car, to pay for medical expenses, to help out a family member, then you need to move that money to cash now because it may fall in value at the moment you need it. And finally, might you panic? You've got to really seriously, soberly evaluate, are you going to hang in there no matter what? And if you feel you may panic, you'd be better to reduce your equity exposure now to prevent the risk that you'll sell while prices are low.
What I'm really worried about are people who are so close to retirement.
Yeah, I share your view, Angie, because if you're 20s, 30s, 40s, 50s, you can wait this out. But if you're in retirement, you need money now. You need to support yourself at the moment. And so what do? Well, we need to see if we can reduce your expenses. Number one, can we cut your costs? Number two, can we find the income you need from other resources? Equity in your home, for example. Or if you are 62 and you haven't started Social Security yet, maybe you should. So there are other strategies to consider to help you avoid spending your money out of your portfolio now while prices are lower. And so there's no substitute for meeting with a financial advisor who can examine your overall situation and give you the advice that's in your best interest. We're expecting it to be very volatile for the next 6 months. I would not be surprised to see substantial declines in the stock market in the short term. We've just written a new report on COVID and your money. I encourage you to read it. You can download it for free at our website, edelmanfinancialengines.com.
Ric, it was wonderful to have you here, and we do hope you'll come back.
We'd love to. Thanks, Angie.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.